environment.
I think what's tough as a listing agent is really educating our sellers about the fact that this is a reality. And when the homes are just sitting, over a month, 2 months, possibly three, and they really need to do a price adjustment and they don't want to, they really need to realize that it is the market. It's not that their house isn't valuable. It's just they have to adjust.
The market shifts. Yeah. But one thing, I mean, one of the contracts I have right now with the buyer using the buy down is the sellers ended up netting the same because they
Mm.
took the strategy of saying, hey, your house is listed at 5. Our buy down costs, I don't remember the exact numbers, 10. Let's just use, simple numbers for ease. So we'll offer 510. You'll net the same. You'll give us a $10,000 credit. It'd be just like if we offered a full price offer without credit. So the sellers didn't lose, they're winning still. They got what they wanted, and the buyers are winning. They're saving themselves, hundreds of dollars a month by having 2% lower for the first year and 1% lower the second year. And then the goal would be to refinance them. But also,
Wow.
your worst case scenario, and that's if the rates don't come down, I think they will, but worst case scenario, they don't. In 3 years, hopefully you're making more money, right? Like you're
Yeah.
making strides in your employment. And so you've
Mhm.
got extra cash that payment, and we know inflation, that payment that you're paying, you would have been paying, I don't know, the interest rate of today in 3 years, not too shabby. And how much home did your house appreciate in, or how much value did your home
Yeah.
appreciate in over that 3 years? That if you were to
That's
wait and try and buy it when rates were lower, it'd
mhm.
probably be in the same place, if not worse.
Yeah, for sure. And then also you mentioned that you do have some 0% financing, no mortgage insurance programs for first-time homebuyers.
Yeah, we do. We have a few. We have an FHA based program. There's 2 ways for that. It technically has like a second mortgage where that covers the down payments. One is
Okay.
repayable and one is forgivable. So we can kind of go into the details, or maybe that's a whole nother video series.
Yeah.
And the other one is 100% conventional financing with no mortgage insurance. So that's pretty cool as well.
Oh.
Condos with that one, I'm not having to worry about the FHA approved list.
Mm.
So sweet. And then the other thing is that, you aren't coming in with a down payment, but you still have that. So I always consider it buckets. Like you have a down payment bucket, and you have a closing cost, prepaids, and reserves bucket. But guess
Yeah.
what? You're not coming in with a down payment. That bucket is wiped out. You have the second bucket that you can ask the seller to help you with. And we're seeing those seller credits actually come in this market. So you could get in potentially to a house with very little of your own funds.
Wow.
I know. Buyers are winning.
It's the time to buy.
We're here for it. They've had a rough, all of our buyers have had a rough 2 years. So seeing them
I
get the
know.
W's and using this market as an opportunity. I think you told me a statistic earlier that you read or heard somewhere that only 20% of the buyers we were working with last year were here or something like that.
Yeah.
So that
Yeah.
tells me that your competition just went down by 80%, which is huge.
I mean, I don't know how it feels for other realtors. I pick a lot of people's brains, but I know that we're all feeling it. It's not that we're not working with buyers and sellers, but we are definitely aware that a lot less people are looking right now.
Yeah.
So, and there are a lot of advantages to a recession. So everyone, don't be scared of the R word. Don't go hide up in your house and, stop spending money. Just be aware of what that can look like and how there are opportunities,
But we're
even if.
talking recession, right? But housing prices, they're still saying, I mean, most of the reports I'm reading, homes are still going to appreciate somewhere between 2 and 5%. So talking
Yeah.
about financial strategy and thinking long-term strategy,
Mhm.
home's a pretty safe investment for your cash.
Exactly. Exactly. And it's not just a financial decision, it's a lifestyle decision. You need a place to live. So would you rather pay your own mortgage and instead of having a landlord? I know that I would. So
Well, I'm loving the meme right now too, that interest rates may have a 7 in front of them, but your rent is 100% interest. I'm like, that's true. They
oh
have
yeah.
a point,
Oh yeah.
Yeah.
Good point. Good point. Well, cool. Thanks again for meeting with me today and letting everyone know about these awesome programs that Academy offers and that rate buy down. I'm like, 2, 1, and I'm like, I just remember your video, and I'm like, I can do that. I know easy math, like 2% less than the going rate, and then 1% less. I mean, that is. I
Honestly,
don't
when
see
you just
why.
do it, like I don't know if you use my app or not, but it has kind of that payment calculator. And if you show someone what 2% lower an interest rate does for them, it's a lot. And it's explaining it to sellers of it's not that my borrower doesn't have money for closing costs, it's that this is required to be paid by the seller. That also, when you're thinking about offer strategy and how something looks to a seller, it doesn't tell the seller like, oh, they don't have the cash, this might fall through. It tells them like it's a requirement of the program, and it makes sense because they're going to save so much on a monthly basis, and this is getting more buyers into the market. So it's a win-win.
You're required to help us. No,
You have to, you must.
I mean, you should if you want to sell your house.
Love it.
All right, Kat. Well, let's meet next week and talk more rates and market strategies. I appreciate your time.
Environment.